Welcome back, investors, to Ticker Time News. I'm Adam, and today I want to do things a little bit different. Today I want to start with a request from our Discord server, and the topic was gold. So let's talk about gold, and when will this shiny yellow metal get back to the upright position again instead of continuing to fall like it has since March of this year? First, let's look at a couple of key levels and indicators here on the chart. And then we'll talk about reasons for when or if gold can get back up to its highs above $2,000 an ounce. First off, the ticker symbol that I use for gold is just gold, GOLD, on TradingView. And there is a link in the description to TradingView. Sign up, it's free, doesn't cost a penny, and you can chart along with us at home. Now, with gold, the gold chart is the red and green candles that you see here. Everything else is kind of noise that I use to determine whether something is tradable now or not. And we're going to talk about those things. Number one, gold has reached its peak back here on, and let me get my highlighter, should have had that ready. Back here, March 22. When Russia invaded Ukraine, gold skyrocketed in February all the way up to its highs for 2022, okay? And that closing high was, I'm on a couple of different buttons there. And the closing high for 2022 in March 8th to be precise, was $2,070 an ounce. $2,070 an ounce for gold. Now, gold down here on the bottom right of your screen, $1,672 an ounce. That's a pretty big drop for something that has a market cap as big as gold. You think crypto's got a big market cap. Well, when you see the market cap of gold, there's just no comparison, at least not yet. So the 52-week range for gold is 1653 for the low and the 2070 that we talked about in March. That's the 52-week low and high for gold. Today, it's really moved between $2, $1670 and $1672. And I should say that that's now in the after hours and it'll count towards tomorrow, not for today. Looking at the performance, again, on the right-hand side of your screen here, bottom right corner, over the past month, gold is down 4.4%. 3 months, down 8.3%. Year to date, well, actually, let me do 6 months. The past 6 months, it is down 14.6%. But year to date, gold is down 8.5%. Now, if you compare that to the S&P 500, being down somewhere between 15-20% for the year, and gold being down 8.5% for the year, well, you might think that, it's not doing that bad. But if you compare it to like an oil company for 2022, then yeah, it is doing pretty bad because some of those oil companies are up pretty hefty this year. But back to gold here. Gold, of course, on this chart, it is in a very particular spot right now. One of the big reasons for gold falling since March has been a hot dollar. The US dollar has been on a roll. I don't know when it's going to stop. I expect a blow-off top type of reaction for gold before it actually reaches its high. Now, this orange jaggedy line here on the screen, there is a blue highlighter, or a blue trend line, I should say, that catches the lows here for the dollar on its way up right there, okay? And then when we get to the top, gold is so far off this trend. The US dollar is so far off this trend line, it's incredible. But you will notice, looking at that orange line versus gold, right? Gold is following this black trend line. These are the peaks right here. And then it caught a break there. And now it is kind of just bouncing around this trend line. Gold has been going down since March, but the dollar has just been getting stronger and stronger since March. So I know what I think you probably know what I'm going to say next. One thing that needs to happen for gold to start moving in the opposite direction and start gaining some value instead of losing value is the dollar needs to come down. Yeah, it does. The dollar has need to stop this bullish run that it is on for gold to see any type of significant rebound effect. The dollar has got to weaken for gold to strengthen. Just keep that in your mind. The dollar has got to weaken for gold to strengthen. And it's the US dollar. We don't care about the euro, the yen, or anything else right now on this chart, just the good old US dollar. The greenback. Green versus gold. Well, the dollar is not going to stay this strong for too much longer. I mean, it could potentially be another 6 months of a strong dollar, especially if things go in its favor, which means another 6 months of hardship for gold. But I'm not so sure about that. I don't know the timeline of when the dollar is going to weaken to help gold strengthen. So that's number one I want you to watch, okay? And you can do that if you have your gold chart here, GOLD, just as the ticker symbol on TradingView. Click this plus button up here on the top. Circle with a plus inside of it. When you do, type in DXY. That is the ticker symbol that I use for the dollar, and that's how you can get the orange squiggly line on here to help watch how the dollar is moving versus how gold is moving. It has a very inverse relationship right now, just like the S&P 500 has an inverse relationship to the US dollar. Whenever the dollar has a strong day, the S&P 500 has a weak day. Okay, let's take that off now. The next thing I want to focus on are a few key levels here. Now, for the dollar, gold, my goodness, I'm getting the two so mixed up. Please excuse me for doing so. Gold right now, it's got a bottom support area that's not real strong, but it's at 1650 an ounce, okay? 1650. If I scrunch up this chart here and we follow this 1650 line back a little bit further in time, you can see that the last time it acted as support or resistance for gold is back here in March of 2020. Okay, right here. That was the last time 1650 was any type of help supporting up gold. But gold just hang out there for a little while before shooting up even higher. Way above 2,000, well, close to $2,075 an ounce at that point. That's what COVID did. Now, on the upside, if the dollar does weaken and allowed gold to have some rebounds, because gold has had a few rebounds in 2022, mainly the summer rally kind of kicked that off. Well, right now, there is resistance right about $1,700 an ounce. So between these two blue lines right here, this is where gold is getting boxed in right now. And it would be great if gold could just continue to move sideways as the market falls. But unfortunately, I don't think that's going to happen. I think the market's going to continue to go down. I think gold is going to continue to creep down. And I think the dollar, the US dollar, is going to continue to creep higher. That's my play on this. That's what I think is going to happen, at least in the short term, like the next month, the next 2 months. Let's call it that. Let's say all the way up to maybe the election, the midterm election. Or maybe gold can fare a little bit better, and maybe that uncertainty leading up to the midterm election can provide some stability to keep gold from going down below that 1650. But that is a key level. Why is 1650 a key level? Because if 1650 gets broke, okay, if 1650 an ounce gets broke, look at this. I want to show you these two purple lines. If 1650 is broke, gold is going to fall all the way to 1575. That is a big drop. $75 worth of gold vanishing if it breaks that support area, because that's the next place there's support, and it's not very strong. It's actually kind of weak. If gold can't hold that 1575, well, then it's down to 1450. That's the next area of support. So a zone in between there, that's not where we want to see gold go. And gold doesn't typically move in big bursts, so don't expect it to fall that far anytime soon. It would take a lot of that greenback to continue to rise in order to push gold that low. But do be aware that that is a possibility. Now, let's keep moving on, okay? I want to talk real quick, just a few things that need to happen in order for gold to go higher. And then we'll talk about the market, and I'll get into all the normal things that I normally talk about. For gold to rise, we need two or three things to happen. Number one, we already talked about. The dollar, the US dollar, needs to come down. The second thing that gold needs is time. Just think, how much is gold up over the past decade? Over the past, is 20 years called a score? Or am I getting that wrong? 20 years might be called a score. Check me on that one. See if I'm right. Or the last century. Gold has risen hundreds of percentage points over the past 20 years. So time is something that you need. And the third thing to know is that gold thrives in chaos. When the world is in chaos, that's when gold shines the brightest. And if you're trading gold or thinking about trading gold, then this will give you your best returns. Look what gold did during COVID, right? Or when Russia invaded Ukraine earlier this year. We have it right here. When Russia invaded Ukraine, gold was down here at about $17.80 an ounce, and it shot all the way up to $2,070 an ounce. Gold thrives in chaos. But since that chaos has subsided, gold has been coming back down. So if there are any further surprises in this world, any black swan events like COVID, you can expect gold to rise significantly and quickly. And that's the best time to trade gold. When times are dark, gold is bright. All right? Just remember that. Okay. If I had a little more extra time, I could have dug into gold a little bit deeper. If you would like me to, just let me know, and I would be happy to do it. This was kind of a last-minute request that I saw on our Discord server, so I scooped it up and said, you know what? Let's go to it. All right. Some raw thoughts there on gold and what it needs. Now, let's get to the market. The stock market had its issues today, and they had mostly to do with interest rates. They had policy rate considerations on one side and market rates considerations on the other side. Yet the two were totally interconnected. The connection is that policy rates and market rates were rising again. And that made it difficult for the stock market to stage a concerted rebound effort following the sharp losses that were registered yesterday in the wake of the FOMC decision. The jump in rates also raised concerns about the economy suffering a hard landing or a crash landing. The major indices started the day off on a softer note, giving in to follow-through selling interest from yesterday that we talked about in yesterday's live stream, and we flat out said that, you know what, after hours, the market kept falling, so guess what? I would not be surprised to see a gap down opening for this morning, and that's what we got. It wasn't a very big gap down. Let's open this up here. We're on the S&P 500, ticker symbol SPX. Score equals 20 years, 7 years ago, our founding fathers. Awesome. Oh, that's so cool. I thought it was score. That was it was locked back there someplace. I'm glad I was able to find it. Thank you for looking that up and giving me the facts on that one. I appreciate that. Greatly done. Greatly done. Okay. We said that there could be a gap down this morning, and that was the likely path that the market was headed. We got a small gap down, and then we got this range, right? We also said yesterday that today it would not surprise me for the market to fall down to the weekly expected move. This is a key level. Every week, we update our investor community every Sunday evening on 40 different products on what their expected move is for the week. And it's got a 68% win rate. Here, look at this. Look at where it stopped, right on that purple line, which that purple line is sitting at 37.56. It's been there since Monday, actually Sunday evening. 37.56. Where are we right now? 37.58. 2 points. 2 points away from it. So now, we talked about this yesterday. If we look at the RSI, the relative strength index down here at the bottom, it has been downtrending, right? And it is now at 31. And I said, watch yesterday, and I'll repeat it again today, watch for the RSI to get to 30 or below and price action to be on the weekly expected move on the lower end of that. If those two things were to happen, we could see a bounce. Now, I am still under the impression here, my thesis, my hypothesis, that we will see a bounce relatively soon. It could happen tomorrow, or it could happen on Monday or Tuesday of next week. But we are loading up for a bounce, without doubt. When the market gets oversold, we bounce from there. Will it turn into some grand rally? No. But we will at least get a few green days out of it. Maybe some more. I don't know. Don't have a crystal ball on that. But looking at the technical indicators here, we're on that weekly expected move, lower range. RSI is now at a 31. MACD, it is still facing down. It has not started to turn over yet, so we do have that. But it's at a 70.29, the blue line there, which has been falling. I have to go all the way back here to August 19th, which is just about right here for the MACD to start losing that momentum to the upside. So, on the SPX, I'm looking for a bounce somewhere around where we are right now. Let's go to the 5-minute chart and talk about some important levels that we need to watch if we're going to get a bounce. First off, here's today. I got a scoot yesterday out of there. That was some volatile action and a big sell-off, roller coaster ride down to the bottom. I keep buying the dip, that deep dip. Oh, man. I keep buying the dip that keeps dipping, doesn't it? I did open up some long positions today as I noticed a couple of things that I'm going to point out to you right now. Number one is support. All right. We had support right here today. The low there was 37.49. Again, right here. Oh, I lost my highlighter. Again, right here. And the low we had there was 37.52. So 37.52 and 37.49. So let's call it a nice easy number, 37.50. 37.50 is support. We need to keep that 37.50 support. We're 8 points above it right now. If we can keep that 37.50 support, then there is a greater likelihood that we see a bounce, especially on increased volume. Second thing to watch. Where's the resistance coming in at? Well, earlier in the day, we had it right here. That high was 37.78. I think 37.80 is really that key level. Then over here, 37.73. But later in the day, we were able to get up a little bit higher, okay? 37.85, 37.85, and then right here was the high of the day, about 15 minutes before the closing bell, and that was 37.89. So we've got a little zone building here of resistance that is steadily ticking a little bit higher, higher, and higher. That's a good sign. You want to see price moving up, and you want to see that support holding solid. Just a couple of little signs here that we saw today that is kind of showing me that, hey, I think we could get a bounce, right? I'm looking for that bounce. Like I said, I did open a few long positions today, one in the SPX. I'm thinking that we're going to get a bounce here. As a matter of fact, it was, let me just clean this up here. I opened it up right here on this when we tested that the third time. This is when I opened up some long positions this afternoon. I did not cut out any profits when we got up here. I'm looking for a swing. I know it's kind of risky to carry it overnight in this environment right here, but I did take that risk. So we've got that. Now let's go back to the daily here. Now for any type of bounce that we may see, okay, we need increased volume. Well, let's see. Volume yesterday, obviously a big down day. We had 2.4 billion trades. The average is 2.2. Today, we had 2.4 billion trades as well. And I guess I need to add a third digit in there. 2.43 billion yesterday, 2.41 billion today. So it kind of held there, right? The average yesterday was 2.26 billion. The average today, because it's a moving average, it's going to fluctuate, 2.3 billion on that one. So we got to get this market above that 37.80 to really, I think, kick in any type of a bounce. But again, RSI, it's right there at 31. It gets to 30 or below. That gives me a better feeling of an increased probability of a bounce. Okay, so that's what we're looking at for the SPX. Now on the SPY, we'll go over there. I'll give you the numbers. The setup is nearly the same. Okay. And then we'll get back into some of the dynamics of the market today. And I also want to share with you what tomorrow is looking like as far as I want to get it loaded. I think we can load it a little bit quicker on my phone than waiting for instead of waiting for it to load on the screen here. All right. Okay. So on the SPY now, SPY, same thing. I told you it's not going to be very much different. Volume did come down a little bit further on the SPY today, which isn't something you want to see if you are looking for a bounce. Yesterday, that volume on the SPY was at 106 million. Yeah, million versus billion with the SPX. I know, right? Today, though, it was 89 million. So that volume came down pretty hard from yesterday, but the average volume is 83. So it is at least above average volume for the SPY. That's good. The RSI is at a 30 here. So that's a little bit better than the SPX. It also closed, man, nearly right on that lower end of the weekly expected move. That is 373, and it closed at 374, 1 point away. Pretty close, huh? If we get a bounce off of this, it'll be wonderful. Now, it is possible, right? If the Treasury market doesn't work with us tomorrow, then there is a possibility that we don't get that bounce, and instead we either move sideways right here, or we just drift a little bit lower. Now, there is a gap right here. So if we drift too low, we're going to drift lower, okay? Because remember, when we have gaps, we just go through them like butter. Price action just flows right through it, like it's going through a waterfall or something. Maybe not the Niagara Falls waterfall, but your hose waterfall. Okay, the top of that gap starts for the SPY at about 370. So we need to stay above 370 on the SPY. Otherwise, we could be testing the new low for the year. Okay, 370, that's critical, and we're only 4 points from that. Now, looking at the 5-minute chart here, you can see for today, we did tag the weekly expected move. We did it a couple times today and bounced right from it. That was encouraging that we bounced off that line. Not surprising, but it was encouraging. All right, so the low of the day here was 373. The weekly expected move right there, 373. If we can hold 370 and get some sort of a bounce, that would be great. The only thing about this is, if we look at the highs for today, we had it up here, okay? And this was 376, but then it went down a little bit right here, okay? And it went down, not that far, 375, just 1 point. And then it ticked back up again here. I lost my highlighter. Right here, and then it ticked up higher right here before the close. This was 376 and 377. Getting above 380 here would be great. Seeing that psychologically, getting above 380 would be wonderful, because that's moving significantly from the 374 where we are right now, because we had, pretty big selling into the close. Hopefully that doesn't continue into tomorrow, but it could. Let's just hold 370. Okay, go back to the daily view, and I want to go to the Qs. Let's see here. Do you see an effect from the Max Payne Friday at 387? No, I don't think so. I don't think so. Because what was driving today, the 10-year Treasury, it moved sharply to 3.7%. And the 2-year and the rest of the curve also shot higher. And that was responding to the Fed's policy rate and the guidance that the Fed gave yesterday and a series of aggressive rate hikes from other central banks today. That's what really put the brakes on. I mean, the Bank of England, it raised its key policy rate by 50 basis points. I think 2.25%, 2.25%. And then the Bank of Indonesia also raised its policy 50 basis points. Hong Kong, they went up 75 basis points like the US. And the Swiss National Bank, they went up 75 basis points too, to 0.5%, actually exiting its negative rate domain for the first time since 2015. So that was a pretty big deal for the Swiss bank. And then the Bank of Japan, well, it bucked the rate trend completely. It chose to leave its key policy rate unchanged at negative 0.1%. Yeah, the Japanese rate is a negative percentage rate. Wow. So those are, I think, reasons for the pain that we're seeing. Okay. Max Pain Friday. I don't think that this is related, at least from my perspective. I'd be happy to hear others' perspective on it as well. Now, since I just mentioned those rate hikes from other countries and Japan still in negative territory, there's something else that I should mention about Japan today as well. Their Ministry of Finance intervened to support the yen for the first time since 1998. The US dollar to the Japanese won. Won, did I say, or yen? Oh, now I'm thinking I'm saying it wrong. You understand what I'm saying? It was down 1.2% to 142.35. But the yen's strength faded during the day. Notwithstanding the stronger yen, the US dollar index, it was up another 0.5% today. Like when we were talking about gold at the very beginning of this video, with the dollar being up, that does not help the stock market, equities, and that does not help gold. The dollar being up another 0.5% today. Here, let's look at that. Then I'll come back to the Qs and the IWM real quick. I mean, look at the strength of this dollar. This greenback has been on fire. Absolutely on fire. It broke 111.57 for its high today. Now it closed at 111.34. Rounded up to 0.35 if you would like. But 111. Up big time. Now, it is pulling back. I suspect that it will come back down tomorrow. And that's another thing that's leading me to believe that we could see a bounce in the equity markets tomorrow. Like I have explained in other videos, the 5-day EMA, it is crucial. It's very important. And whenever, like the S&P 500, for example, let's look at the SPY. If the SPY were to have an aggressive move up or down, okay, and it disconnects from the 5-day EMA, think of that as like a circuit board. So now that circuit has been broken. And price action needs to reconnect to get that electricity to move. So whenever it has a big day up or down and it disconnects from the 5-day EMA, typically that next day follows with some sort of reconnection. And it doesn't have to necessarily be the candle that connects, but the wick of the candle. It'll connect. So with the dollar jumping off its 5-day EMA today, I could see it pulling back down, reconnecting with that 5-day EMA tomorrow. And it's at 110.8 right now. That's where the 5-day EMA is for the dollar. And the dollar currently in after hours is at 111.2. So that's another reason why I think markets could have a little bit of green tomorrow. If not, maybe a rally. Maybe then it could pull back, leaving a doji star type candle. We talked about doji candles before. Talked about them yesterday, saying that today there could be a high probability of one happening. It didn't. I thought there for a minute when it rallied there towards the end of the day that maybe we're going to get that doji candle because that's exactly what was lining up, but then we sold off into the close during the last 15 minutes. Now, the dollar, it rising today, it benefited from all of this interest rate differential trade. The stocks, meanwhile, did not benefit. Did not benefit from nearly any buying the dip whatsoever. That's something I haven't said in a while since I saw your comment there earlier about buying the dip, right? Now, there were some individual winners like Microsoft, and we'll talk about a few of them, but let me finish here with the Qs and the IWM. Now, the Qs are not on that weekly expected move yet. That is interesting. And the Qs, they fell further than the SPY did today. The Qs were down 1.2%. The SPY was down 0.8%. Now, it does have a little bit of a wick here, but it still did not connect with the bottom end of the weekly expected move, which I think is a good thing because what's different here between the Qs and the SPY on this lower end of the weekly expected move is this gap. Let me get the highlighter again. This gap, this bar right here, this gap, it is right underneath the lower end of the weekly expected move. So if the Qs were to break that 278, which is the lower end of the weekly expected move, then it could just slide right through this gap, testing new lows for the year. So I think we need to have a little bit of hesitation here watching the Qs because that weekly expected move is so close to that gap that it could test new lows for the year if it does break that. So keep that on your radar. Again, the lower end of the weekly expected move for the QQQ is 278. It's at 280 right now. So only a couple points. Now, when we look at the 5-minute time frame for the Qs today, let's adjust this chart. Take out yesterday's rubbish there. And there, pretty much same type of price action pattern that the SPX and the SPY had today as well. Now, the low here was like the SPY this morning, right here, slightly above my head, off to an angle there. But it got to a low of 278, which is the weekly expected move. But when you start looking at the point, it was 278.8, where the weekly expected move is 278.0. So not quite tapping it there. And then it made a higher low that was promising, and then even into the close, it was a higher low, even though it was selling off. Now, when we look at the highs, first thing this morning, there was a high, then we went to a lower high, and then a lower high, but then we kicked off to a higher high and a higher high, off the higher low and higher low. So hopefully this can translate into a potential bounce. Now, I do want to add one little caveat here. When the market gets overextended to the downside, it can stay overextended for a while. I just want to point that out to you. And the second thing that I want to point out to you is that when we have these crazy moves to the downside, even when things get overextended, that's sometimes when you can see the biggest falls. Now, the RSI was not the same earlier this year when something like this happened, but price action followed it to a T, and that was right here with this boom, boom, and boom, leading us to the low of the year, okay? RSI wasn't there, but that price action leading to further selling, which led to further selling, was there. Luckily today, we found support on these different indices, and that at least gives me more confidence to believe that a bounce is coming shortly. Whether tomorrow, whether next week, I think we're going to see it pretty soon. IWM. You, sir, are most wise, and your opinions are well thought out, considered, and on point. Thank you. You are very welcome. That is very kind of you, sir. I greatly appreciate that. That is very nice of you. I just want to say I greatly appreciate your comment there, and I greatly appreciate your time here with me, learning about this. You know, this is all a journey for us all. So I greatly appreciate that. And I wanted to let you know that you, sir, are greatly appreciated. Everyone watching, every one of you are greatly appreciated. And I never want to let that skip away and be a thought off in the space somewhere. But right front and center, you are awesome. And I greatly appreciate each and every one of you. So thank you for that. Again, I greatly appreciate that comment. Okay, going to the IWM. It did slip out of its weekly expected move. That weekly expected move is 172. It closed at 171. One thing that held up, luckily, is that this gap right here, the top of that gap is right about where IWM closed at 171. This gives me a little bit of pause. It was nice that it didn't close within the top of this, like 170 or 169, because then tomorrow could open up and we just gap down right below this gap here, creating another gap that would get filled on the way back up. So this one gives me a little pause. I'm more comfortable with, SPX or the SPY or the Qs having a bounce. This could be a little more concerning since it is so super close, like sitting on top of that gap. That doesn't mean it has to go through it, but if it starts, it's going through it, right? If it reaches that halfway point, it's gone. Now, if we look at the 5-minute chart of this on the that gap there, the wick did go through it today. But I want to point out the RSI right quick. It closed today with an RSI of 32, so still not quite under that 30, which leads me to believe that the IWM at least could have more downside. That's your small caps, right? So again, I feel a little more safe with the S&P 500, with the NASDAQ, than I do with small caps right this moment in time. Now, if we look here, went a little too far. Yeah, that big sell-off was yesterday. This afternoon is what I really want to look at. So we had this declining high, lower high, lower high all morning, followed with lower low, lower low, lower low, before it finally turned around right here. There was a big spike of green. You see that in the background, that green spike? That was buyers stepping in on the IWM once it started to touch that gap. The low was 170. So it did get 1 point into the gap before a big burst of buyers stepped in and bought. Okay. And let me give you the volume here. It was 204,000 versus an average of 24,000. So a huge spike of volume here. This is something that leaves me feeling positive, even though there's quite a few negatives here with the IWM. But then we made a higher low, and we closed off with a higher low, a higher high, a higher high. That is positive in my eyes, okay? So the afternoon was a little more constructive on the positive side, on the bullish side, where this morning was definitely constructed more towards the bear side. Now, we are not perma bears. We are not perma bulls. We are perma flexible. Remember that. All right, cleaning this chart up a little bit. Okay, let's talk about some of those individual winners like Microsoft. Let me go back to the daily view here, and then I'll type in Microsoft's ticker symbol, which is MSFT. Okay, so Microsoft, why was it a winner today? It was up 0.9%, which is confident that regulators will approve its acquisition of Activation Blizzard. That's what helped Microsoft. A little good news about its acquisition. Okay, simple to understand there. Now, Microsoft's RSI here is down to a 25. So remember when we had this head and shoulders right here, right? That pattern, and then it broke down, hit our target. It was beautiful, and then bounced. Well, Microsoft, it doesn't have this head and shoulders here on the daily view, but it is getting oversold. So I would expect to see this one to, it was up 0.9% today, and that still leaves the RSI at a 25. So Microsoft's got some room to come back up here. And again, it's at 240. If I didn't say that already, a share, that's where it ended the day. Now, another winner today was Lennar, which is a home builder, surprisingly, right? LEN, Len, is the ticker symbol for Lennar. It was up 2%, which moved higher after its earnings report. It had a decent earnings report, which helped to obviously lift the stock up higher. Now, home builders, I think there could be some trouble there. Okay, I'm not long on home builders right now. Short term, they've had a couple of little pops here recently, but long term, I think there's pain in the home housing market, and the home builders, I think, are going to have problem selling their homes and selling them for the proper profit. Now, a big one that moved today, if you're watching pharmaceuticals, I'm more watching biotech. I think it has some short-term potential that other sectors may not. But Eli Lilly, LLY, is one of those medicine pharmaceutical names that was up 4.9% today. Two reasons. Number one, there was an upgrade from USB to a buy from a hold. Now, why did USB issue that upgrade to begin with? Because there was news of the FDA approving possibly Eli Lilly's biggest drug ever. Now, the name of that drug, it does skip me for right now, but I do remember that it has the potential for being Eli Lilly's biggest drug ever. Biggest one out there to help. I don't even know what it helps. I don't know what the drug is. I remember reading the drug name, but I cannot for the life of me remember what that drug name was. So we'll just let that one slide for right now. This did bring it back above its 20-day moving average, but it is seeing resistance at its 50-day moving average, which right now sits at about 314. It's at 310. So I don't think there's much room left here, but it could continue tomorrow, maybe go and tag that 50-day and then, kind of stop right there in its tracks. And RSI is at a 41. So it's, oh, there it is. Manjaro. Morn, I can't even pronounce it, so forgive me for getting that wrong, but I am going to do this because this will be very helpful for everyone who wanted to know what that drug was. Here it is right underneath me. Thank you for looking that up. You have been saving me today, looking up the points that I keep forgetting. That's awesome of you. I appreciate that. All right. Moving on now. Another one of the winners today is Salesforce, CRM. Oh, got to get the cursor back over here. CRM is the ticker symbol for Salesforce. They were up 1.7% today. Now, Salesforce was up and outperformed after providing an upbeat long-term outlook at its investor day. That's what helped it. But it has had a horrible fall here recently, just like so many others. But yeah, CRM, it did buck the trend today. So I did want to bring them up at least. But look at this. Flat quarter to quarter since their last quarterly earnings in middle of August, end of August, it has just been coming down. And before that, yeah, not looking so great. And this is one that CRM, they are into customer management, different software applications, right? So Salesforce, if the sales aren't coming in, if the sales force is shrinking at a company, those two things do not line up for Salesforce. And if we are going into a recession, which I believe that we are, I don't think the market's going to see its bottom until we reach that recession. Now, I know we're in a paper recession right now, but whether or not that paper recession, how long that lasts, I mean, for the third quarter, right now we're in the margin of error for our GDP. And that margin of error right now, I think we're sitting at about a 0.3% on the positive side. That could very easily fall to the negative side, especially once we get into from the preliminary all the way into the final GDP number for the third quarter. But we don't have to worry about that right this moment. Whew, let's just make it through the rest of this week, right? All right. Okay, so overall, in this market, there was not any coordinated buying effort on a broad-based level. I'll put the SPX back up here because I love that thing the most. The lack of a buying effort, lack of a broad-based buying effort, that point was evident in the advanced decline line that favored decliners by a better than, let me look at it here, I wrote it down, 4-to-1 margin at the New York Stock Exchange and a better than 3-to-1 margin at the NASDAQ. And it was also evident in the 1.4% registered loss by the Invesco S&P 500 equal weight ETF. Ticker symbol is RSP. This is the ETF to use. I know I always shout out the Mega Cap Growth ETF, ticker symbol MGK, for watching those mega caps move. But when you want to see whether or not there's a broad-based move to the upside or downside, this is the ETF that you want to use, right? RSP is that ticker symbol, and it was down 1.4% today. That means equal weight, equally applied across all 500 stocks. So when that's down, you know there's no broad-based effort. But when it's up, depending on by how much it's up, well, then you could potentially be seeing a broad-based rally. So keep that in mind. Keep that ticker locked in. It's one that you can use to help you kind of judge that. Now, when the closing bell rang, there were just two sectors, and I want to pull those up here. There were just two sectors showing a gain. Healthcare was one of them. XLV is the ticker, and it was up about 0.5%. XLV. And let's go. Let me just go ahead and pop that up. Biotech is obviously part of healthcare. Now, I think biotech has some relative strength that it can push out, especially if we get a return, a rally going. But here, and ignore the weekly expected moves here. This is not the updated one. If the biotechs can continue to show relative strength, that can be successful for the healthcare sector. Again, XLV is that ticker symbol. Now, the other place that saw any green today, and just barely, was communication services. It was up about 0.1%, maybe like flat, but I'd count that in the green. And that's XLC again. Now, consumer discretionary XLY, that one had the hardest fall today by 2.2%. It led the losers, underperforming as worries about rate hikes and a slowdown in discretionary spending. Well, it hit home with this sector today. Now, other sectors in the, let's call it sluggish lane, included financials, XLF, down 1.7, industrials, XLI, down 1.5, and materials, ticker symbol XLB, down 1.2%. Oh, and let's not forget about this sub-sector, semiconductors. Let me drop this down just a little bit. SMH is the ticker there, down 1.8%. Semiconductors were one of the weakest industry groups, which weighed heavily on the information technology sector, ticker symbol XLK, which was down a full percentage point. Now, it is getting close. It has not crossed below its lower end of its weekly expected move. This is updated for this week. 193 is that lower end, lower range on the weekly expected move. It closed at 195. What made semiconductors so weak today? Well, losses in its key constituents. AMD for one. AMD is the ticker symbol. Advanced Micro Devices, down 6.7%. That's a pretty hard drop. And then, and I need to adjust this up so you guys can see these as well. The price and percentages, they're over here on the right, bottom right corner. AMD is, man, let's pull this up a little bit. Now I'm going to go to NVIDIA next, but I just want to pull AMD up here a little bit so we can see better. I need to adjust this buy box for AMD, and I really think I need to go a lot lower than where it is now. Where should that be? Right now, I don't know. Let's just bring it down here to that 69 level where it closed today. But, you know, with how far I dropped NVIDIA's buy box, you know, AMD's got to do the same. It's got to go lower too. And speaking of NVIDIA, let's go look at it. NVDA. I'll work AMD out a little bit later, trying to figure out where that buy box should go. But NVIDIA, it landed right on the top of the $125 a share buy box that we set up, goodness, was it about a month ago when we updated the buy box for NVIDIA? No, we've always had a buy box for NVIDIA, and it was down to 150 a share. I was told no way. But now it's, let me just get that gap out of here because that's not relevant right this second. All right, so NVIDIA, it tapped that buy box, and that buy box started at 125, and it goes all the way down to 110. That's the range where I think NVIDIA could easily fall into. Now, when we set this up a month ago, after NVIDIA's, its gap down, the gap that I just removed to clear this up. But, oh, come on, highlighter. Oh, you engaged, highlighter? This gap right here, this is when we set up the buy box, and we dropped it to 125 for NVIDIA. We hit it today. Congratulations. We hit it today, but I think it can go lower. So do be cautious. There was increased volume today too. 75.8 million versus an average of 64.3 million. Now, notably, the stock market tried to stage a late comeback. Like we were looking at the charts, having traded in a narrow range today for most of the session. That comeback, however, it got stopped out shortly before the close as there was a rush of selling interest in the final 10 minutes of the session that left the indices near their almost worst levels of the day. Now, looking at some data that came out today. For the week ending September 17th, initial claims increased by 5,000 to 213,000. Now, the expectation was 220,000. So it didn't really move that much from last week. It was about the same 213,000. Now, for the week ending September 10, continuing jobless claims decreased by 22,000 to 1.379 million people. Now, the key takeaway here is that the low level of initial claims, which is a leading indicator, remember, will register with the Fed as a base to maintain an aggressive line with its rate hikes, since it sees a softening in the labor market as a necessary ingredient for helping to bring inflation back down to its 2% target. All that Fed speak that we dove into yesterday. Now, looking ahead till tomorrow, Friday, the last day for this week, it looks like, and I'm going to go to a weekly view for SPX. These things should be loading all together. It looks like we are setting up for a weekly loss. A weekly loss for the SPX. Oh, did it not change? No, it's still on NVIDIA. My apologies. SPX, S&P 500. I do still think it's lining up to be a loss though. Yes. Just want to double check that. But looking ahead till Friday, there's not a lot of news out there. The market will receive the preliminary September IHS Market Manufacturing and Services PMI. That comes out at 9:45 a.m. And that's it. That's the biggest data that comes out tomorrow. And again, 9:45 a.m. Eastern is when that hits. That could affect the market in the morning. Maybe we do sink a little lower in the morning before getting a bounce. Or maybe Friday is just going to follow like the rest of this week. And, well, I can't say that about Tuesday. But Wednesday, Thursday, I can. Maybe we end up with a red day tomorrow. It would not surprise me. It would surprise me if we close outside of the weekly expected move. We're pretty much sitting right on it on all the indices except for IWM. So it would surprise me if we do close out of it, which makes me think that we could have a little bit more of a greenish bias for tomorrow. If we close outside the weekly expected move, that's like 5 or 6 weeks now where that has happened. And that is highly unusual. Highly unusual. It means that the most efficient part of this market, the options market, who can price in risk with a 68% win rate, is inefficient at this moment in this market's history. So do keep an eye out for that. Now, if you do have any questions, go ahead, plug them in, throw them in. We'll talk about them. But I am going to kind of wrap this up here pretty quick. It's a Thursday evening. It's my daughter's birthday, so I got to get back out there to her. But if you do have some questions, I'll take them. Otherwise, we can wrap this up and we can get back in it tomorrow. I will be back live tomorrow after the market has closed. So if you could do me a huge favor and click that like button, share this video with a friend. Those two things greatly help out this little old channel of ours. And if you like this perspective, consider clicking the first link in the description. Join our private investor community. We do weekly expected moves. We do trade setups. We do all kinds of deep dive information that can help you along your investor journey. So with that said, I will wrap this up. Thank you. I greatly appreciate you spending your time here with me each and every day. And I'll be back tomorrow and we'll talk about what happened in the market, why it happened, and where we're going to go. Okay. Have a wonderful evening, everyone, and I will see you in the next video. Take care.